Hello guys and welcome back to my channel. I just added more Adobe shares. The stock is at a 10-year valuation low and everyone is panicking about AI. But I'm not just buying on hope, I'm following the CEO whose paycheck depends on beating the market. On March 12th, we are going to see if Adobe is the next big AI winner or a value trap like PayPal. The difference between PayPal and Adobe CEO game is that Alex Chris was relatively new to the company trying to make a turnaround story. But the CEO of Adobe, Shantanu Narayen, has been with the company since 1998 and he went through multiple crises and I believe he knows how to deal with that. So first, let's talk about the CEO. This is how he looks like. His 2026 compensation plan is public and you can find the information which was submitted by the company to the Securities and Exchange Commission, so the Form 8K. He's been granted over 100,000 performance shares, but he only gets them if he beats the Nasdaq 100 over the next 3 years. Also, it's stated that the incentive plan requires that the company achieve at least 95% of the revenue target for the fiscal year 2026 and at least 95% of the earnings per share, again for the same year 2026. Unlike the situation that we saw with the PayPal, Narayen is the person, the CEO, who went through every major tech shift for 18 years, and he isn't just collecting a salary. His personal wealth actually is tied to making this stock outperform everything else in tech. Also, it's worth mentioning about the Adobe's Buyback program, and they recently authorized 25 billion US dollars to buy back their own shares through 2028. And after a record-breaking 2025, where they spent nearly 12 billion dollars, they still have roughly 12.5 to 13 billion of dollars left in the tank. And that is enough to swallow nearly 10% of the entire company at current prices. So when market hates the stock like it's happening now, Adobe management is standing there with a giant vacuum cleaner trying to suck out as many shares as possible, making your shares as well as more valuable. As I mentioned before, we expect the earnings report to be on 12th of March. Here is what I'm going to do. I will open the press release and look for the following figures. First of all, net new annualized recurring revenue. I speak about the quarterly target. And if it's going to be in the range 440 million to 450 million, it will tell us if people are actually paying for those new AI features right now. If they beat this number, the narrative AI is killing Adobe just goes away. Then next figure I'm going to watch, it's RPO or backlog growth. It should be 12% or above. And this is the shield for the company. It's the contracts they've signed but have not built. Strong growth here means enterprise customers are locking in for the long term. And the next number I'm going to watch is going to be the operating margin. I would expect roughly 47%. I speak about the non-GAAP standard. Adobe is considered to be as a cash machine. If they can keep margins this high while building the world's best AI, it proves they have world-class pricing power. Now, I also would like to be mentally prepared for the worst case scenario. And how do I see it? Because I've lived through the PayPal crash, I always prepare for the worst. If Adobe misses these targets and AI fears take over, we have a technical so-called danger zone. So if I look at today's price of the stock, which is roughly $266, our first target that we might see if the company misses the numbers that I spoke earlier about is going to be the standard 10 to 15% panic drop, which will move the stock price roughly to $235. But if the growth stalls, the market might re-rate Adobe like a slow legacy company, and that's the absolute worst case scenario for me, and I'm mentally ready for it, and I'll probably see the price range between $185 and $200 somewhere here. By the way, remember about the 48-hour blackout. It means that for the first 2 days after earnings, the company is legally barred from buying back its own shares. If the news is bad, there is no floor to catch that fall. So, to conclude, when the earnings report will be released, obviously I will open the earnings report itself. I will compare the numbers with what they promised in the previous quarter. I'll compare if the company business is actually progressing or not. From the first look, this might look like a gamble. I say if they match the numbers, we win. If they miss the figures, we lose. But I wouldn't touch this deal if I didn't believe that the worst case scenario for the business is already priced into the stock. Because the market is acting like Adobe's mode is already gone. But the numbers tell me a totally different story. For those of us who follow the logic of Warren Buffett and Peter Lynch, the best time to buy actually is exactly when nobody else wants to. I'm not betting on a quarterly beat. I'm betting on a high quality, high margin business that the market is temporary mispricing. I'm holding, I'm watching the $440 million mark, and I'm mentally ready for the March 12th. It's still almost 1 month to go, but I decided to prepare myself a bit in advance